Hi everyone, my name is Brittany Lee. I'm part of the Strategic Partnerships team here at SCOR on the business development side. So we really focus on partnering closely with the carriers, insurtechs, distributors to co-create new products. And we have the pleasure of Robyn Wallner here today, which hopefully you could give us a good intro.
Thank you, Brittany. Yes, I'm Robyn Wallner, and I have been in the underwriting profession for a really long time. So more than 3 decades, and I have seen just the transition, the evolution, and all of the different things that have happened from underwriting back in the probably late 80s, early 90s, until what we're doing today. So excited to talk about this today.
Awesome. Yeah, we're excited to have you here as well. So when we're thinking about insurance, technology, innovations, underwriting comes up a lot. We hear a lot about new data sources, digital solutions, innovations on accelerated underwriting, algorithmic underwriting, making the process easier. So as an underwriter that's been around the block, could you give us a little bit of background on what you're seeing on current market trends, the change over time, and where we're kind of going there?
Absolutely. When I think of underwriting, in the early part of my career, it was a pretty standard process, and it really fit into just one place in the process. So there was a very sequential type of experience where an agent and a customer would work together, and they'd take an application, it would be submitted, and then this underwriting thing happened all in a bundle, and then there was a decision and it went out. What I've seen happen over the just many years as the introduction of technology, data sources, and the speed of information coming in, this really slow sequential process has accelerated to a point where there's some underwriting that's starting before the application is taken. There's some underwriting that's happening during maybe a pre-qualification process, a quote process. There's underwriting happening during the application process. There's underwriting that is happening in the background and is happening in just seconds versus maybe a traditional process of 30 to 60 to 90 days. So it's really exciting to see the speed and then the underwriting move a little bit closer to the front end and closer to the consumer in the process.
That's interesting. So I guess it's, when you say pre-qualification, it's almost underwriting in advance of, are you even going to be qualified for this product, and is it a good fit, right? Before you go through the whole process, the whole application, all the data sources are pinged, right?
And that is one of, I think, from a really frustrating distribution perspective, is that agents, individuals, distribution sources would invest all of this time, this money into clients, and then they would be rolling the dice. And then find out, oh, we can't really give this person coverage, or we can't give them coverage at a price that they actually were really expecting, or that we told them that we thought that they might be able to get. And so that experience, I think, is really shifting so that the distribution sources, the agents, better understand the risk going in before they commit some of the time, the money, the resources, and to be able to provide the client really the better fit.
Right, and I guess on the client perspective as well, to go through the whole process and then just be disappointed is not the best customer experience, right? So if you're pre-qualified and funneled to the right product, I think that's actually quite a better customer experience and not investing all that time also on the customer end.
I think that is such an important point for us, for our entire industry, because the more individuals that have an experience like that may be turned off from insurance, and with the kind of the exposure of social media, of the listening to crowds on kind of what they should and shouldn't do, the more individuals that would have a poor experience with life insurance might be turned off altogether. So if we can get to a better place where the customer experiences something, even if they don't get exactly what they wanted in the first place, at the price they wanted, they're at least offered something that will help cover the needs that need to be there, so they can walk away from the experience at least, with a favorable experience, or maybe at worst, a neutral experience that doesn't create some negativity around the kind of the underwriting process.
Yeah, and unfortunately insurance has a little bit of a bad reputation on being not the best process or customer experience. So once you have that bad taste in your mouth, it's almost even more difficult to get them back in the door, right? So, you mentioned all these new data sources, underwriting kind of throughout the process. It almost sounds like more complex, maybe. Do you think there's some challenges that are now being added as we solve for kind of the older upfront process that we're kind of introducing here?
Absolutely. It's really exciting to have new data. It's just super exciting that now we can actually get things like, medical claims billing codes, and we can get insurance labs, and we can get clinical labs, and we can get credit attributes, and we can get, court records. We can get all of these things in a matter of seconds. But now the challenge is, what do we do with it? So if you think of some of the traditional requirements that we had for so long, where somebody would do an exam, they'd do a lab, they'd do an application, maybe a standard, maybe a personal history interview, we get medical records. The pricing and the underwriting individuals, they understood that stuff. Now we're starting to get things where we're talking about hit rates. And what does that actually mean if it's a billing code? Is it a diagnosis, or is it an ordering code for a medical test? What do I do with that information? Things like lab results, there might be 550,000 different tests that if we're going to automate and we're going to digitize some of this to be able to understand that data, now we have to build 550,000 individual rules, or we have to start building models to be able to interpret that data. So the complexity is really in a place where even sometimes an underwriter looking at this evidence doesn't know what to do with it. And how do we manage all of this information?
Right. I mean, that's a lot. One is getting the data itself, right? But a lot of the issues with data is cleaning it, understanding it, categorizing it. Does it actually indicate kind of what you're looking for in terms of mortality or morbidity or whatnot? So I guess, how are you, as the underwriting team and or other teams that you're collaborating with, how are you guys managing all this data and understanding how you want to impact that to your pricing or to the product development cycle of the actual features that you're offering? How do you kind of tie everything in? Because, as you mentioned, it's complex. And in fact, maybe there's a lot of junk data almost included in that.
Yes, with the overwhelming nature and some of the newer data without the historical perspective or the historical experience, we really need to not only understand our business, so we need to understand what we're looking at. We need to be asking the question behind the question of what does this really mean? And then we need to talk to other individuals that have expertise that are really deep in other areas. Things like the actuarial experience, maybe some pricing assumptions, data science, distribution partners, and understanding kind of populations and what's been done up to that point with individuals and the data coming in. Where's it coming from? Has it been cleaned? Has there been any additional information that's validated? Some of those things. What do each one of those points in the digital process mean to us in terms of mortality, experience, persistency? All of those variables, if we do it in a vacuum or we do it in isolation, we are going to miss the boat. I think that's going to be one of the most important things going forward.
Yeah, I think what we are seeing in the market is a bit more collaboration across the different, expertise channels, right? Breaking down those silos and really collaborating from actuaries to underwriters to operations to distribution to how does the front end work and how does that tie into everything and the assumptions, right? Back in the day, you would see an actuary develop a product in a vacuum. They would just develop the product, be like, hey, underwriters, you're going to do X, Y, Z, and the distributors are going to love it. But we're not going to talk to any of them, right? So collaboration is more and more important these days, and I think that's what we see in the market as well. Is that kind of what you're seeing as well at your firm and your team?
Absolutely. When you develop a product, it's really it is interesting when you're in this isolated bubble that you think it's really super cool. You know what? I just created probably the most important thing. But then you talk to a couple people and you're like, yeah, but I have nobody to sell that to. I have nobody that's going to buy that. And they're not going to like the process. And then you might get to the underwriting side and you say, well, that's a really cool product, but I have no way to price it. In terms of underwriting, I have no evidence to help me get through that. So if we can work together to really ask the questions of what does the customer want, what can we sell, how are we going to get it to them, how can we meet them in the place that they need to be, but then check all of the boxes in process, finance, protection, mortality, assumptions, all of that stuff has to come together so that what gets developed is a quality solution. But you have to do it quickly, Because if you don't do those things quickly, you've lost your opportunity. Somebody else has entered the market, they've captured that particular process, and now things have changed already.
Right. So yeah, speed to market is definitely something that is applying more pressure in the insurance industry, I think. I kind of reference it as a Mesozoic era of dinosaurs, right? A little bit slow to move. Maybe if there's a meteor, we may not survive, right? So innovate or die, I really think is true in the industry today. And kind of tying it back to the digitization, the innovation, making underwriting more forward in the process and easier, right? Streamlined application, data sources pulled versus labs. Do you think that maybe we're trending too far to one end, from very paper, labs, slow, to very easy, fast online application? Press a button, you get your policy. Do you think we're maybe leaning too far to one end, and perhaps would pendulum swing back to a little bit more on the kind of more intensive side?
Yeah, no, yeah, our distributors and agents would probably say, no, fast, fast, fast. We need to get this done quickly. But I really do believe for the entire solution and the finances to work, there has to be a commitment. There has to be a commitment by a client and a customer to be able to get into the product. So if we do things so quickly and we spend a lot of money and we underwrite up front and we do a lot of things and we take the strategy of maybe spraying and praying, it becomes very expensive, and the number of customers that we get covered in the end may not be at the placement rate that we need it to be to work. So those are some of the things that I think we really need to think about, is that sure, we can do it quickly, we can push everything up front, but what kind of commitment do we need to make that investment, and how do we target that so that we know which customers we're going to invest in to bring them each way through the process?
Right. And I guess as we wrap up this podcast today and conversation, and thank you so much, Robyn, for sharing all your expertise. And you've been around the underwriting industry insurance industry for a while, and I think you're just a wealth of information, a fountain of information. So to leave our listeners here, what are kind of your future insights and predictions of the market and where we need to go to, one, make sure that insurance stays relevant and up to date with kind of technology, but also managing that risk at the same time, and making sure that it's viable in the way that we approach things?
Yeah, I think this really feels like, just even with my own kind of goals for the next year, is just the year of data and understanding data and actually being able to consume the data. So now we have all of this, we've got it available, but what does it really mean to us? What do we want to do with it? What order do we want to get it in? What combinations make sense? What types of things do we need for which products? And what's the best way that we can actually create the entire solution from the beginning to the end, involving all partners, so that the solution is one that out of the gate becomes a profitable product. I think that'll be the most important thing.
Yeah, so I think the key thing here is collaboration, understanding your data and asking the right questions, and always having your customer in mind and their experience as well.
You bet.
Awesome. Well, thank you so much for being here, Robyn.
Thank you.